Hi there, this is Jian from Spokane Public Library, and welcome back to Ask a Money Doctor. In this following episode, we return once again to Bonita Bell Anderson from Freedom Financial Coaching on the topic of how cost of living allowances and other factors affect your Social Security benefit.
Hello, this is Bonita Bell Anderson here with the Spokane Public Library, and today we are answering the question of how cost of living allowances affect benefits. We're also going to talk about maximum taxable earnings, and we're also going to talk a little bit about taxation of benefits. So one of the best features of Social Security is the cost of living allowance because they help retirees keep up with inflation. So the COLAs are announced every October. This is something that Congress does. They have the ability to determine this every year. It's not a set thing. And it affects benefits starting the following January. So COLAs are related to something called the CPI-W. That means the Consumer Price Index for urban wage earners and clerical workers. That's a mouthful, huh? That's published by the Bureau of Labor and Statistics monthly to show the increase in wages in certain broad sectors of the workforce. So Social Security views the CPI from the fourth quarter of one year through the third quarter of the following year. That's why they're doing this in October to decide what's going to happen in January. And they make adjustments based on that data. They have not given a cost of living increase to benefit receivers every year. There were a couple of years in the past, several years I'm thinking of the last several years, there was a couple of years where there was no increase. The Social Security website informs us that of what that increase will be every year. And so there will be a slide on here for this, showing this increase and how it's typically been done. So we're going to combine this topic of cost of living. One of the big things that I want to do on here is to show you the difference between if you had taken your Social Security earlier at age 62, you're going to have a lower cost of living increase, and that's just because of math. So a cost of living like 2.5%, if they say 2.5% increase, then if you have a payment of $1,500, 2.5% of $1,500 is going to be less of a cost of living increase than if you had waited and your cost and your benefit is maybe $2,200 and you're going to be taking a 2.5% increase on $2,200. So it's just math. So that's another reason to wait, because you will receive larger cost of living increases. So when we're talking about taxation of benefits, one of the things that's interesting is that Congress created a special category of income tax related to Social Security benefits, and they call it provisional income. We're not going to do anything more today than just give you an idea that it's made up of your modified gross income plus half your Social Security benefits and tax-exempt interest. So depending on your total income, there's a place on your 1040 that's going to be specifically for putting down how much your total, you'll have all your different categories of income, how much your Social Security was, and there's a formula for figuring out how much of your Social Security income is going to be taxed. So you might be taxed on half of that Social Security income. If your income is large enough, that could be up to 85% of your Social Security income will be taxed. So the other thing that ties into this a little bit is something called maximum taxable earnings. This is something that's gone up every year. You can see on the slide where that maximum taxable earnings has gone. In the year 2020, it's $137,700. So if you have income up to that level, you're going to continue to be having FICA taxes, Social Security taxes taken out of your income. If you have income above that level, there's no Social Security taxes that are taken out. So up to $137,700 in income, you will be having Social Security taxes sent to the federal government. So both self-employed income and regular wages count and are covered by this Social Security taxation that happens with incomes. And so you will find that that is increasing every year. So just in a nutshell, when you're thinking about when to take taxes, think of this cost of living increase as another reason why you should wait and take your Social Security later. And also, when it comes to taxation of benefits, think about the fact that if you have a larger Social Security benefit, maybe you're going to have to take less out of your IRA accounts, and you're going to have a different taxation formula that is being figured for how much you're being taxed for your Social Security, whereas with anything coming out of your individual retirement accounts is going to be taxed at 100% of the distributions. So that is, in a nutshell, our little discussion today about cost of living increases and a little bit about taxation. My name is Bonnie Bell Anderson, and I'm here for the Spokane Public Library.